The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Looking good, Billy Ray. Feeling good, Lewis. And Christmas is coming early at TFNN. We have Norman, I call it to the minute, Winsky, on the line. Norm, are you there?
Yes, sir, Larry. Good morning.
Good morning. Put your feet to the fire, buddy. Tell us what you got for us in time today.
Okay, I got a special gift for your listeners, Larry, in celebration of my 40th anniversary. I started my letter 40 years ago on October 31. That was last week. And so I'm going to put up, I did this earlier in the year, once or a couple times, show you my intraday times for the day if you're day trading. And so can you see those on the screen okay?
I believe they posted them. I believe so.
All right. I moved it down one notch there. You can take a screenshot and you'll have the whole enchilada there. I got 6 times. However, number 3 and 4 are only 4 part, just in case somebody doesn't have the visuals. I'll read off the times. Number 1, I have 11:14. You want to use a 1-minute bar chart for these, and they're usually accurate when they work within a couple of minutes. So I have 11:14. These are all, by the way, now we're on Eastern Standard. I'm on Eastern Standard Time, and that's 5. In case you're international, that's -5 on your GMT, Greenwich Mean Time. So number 1, we got 11:14. Number 2, we got 11:20. That's just outside my window there for putting them, mushing them together into one. So that's 11:20. Then we have 11:47, 11:51. That's 4 minutes apart. So we're going to just treat those as one and go with the latter one with 11:51. Then we have a 12:56 and a 3:53. And if you can see these on your screen at home, you might want to take a screenshot. The rules are down below. Only use a 2-handle stop loss and look to buy on weakness into the time or sell into weakness. If it goes up into the time, you sell. If it goes down into the time, you buy. And then you have to do a little trade management. That would take too long for me. Basically, we don't give the money back. If you get a small profit, maybe a couple handles in something, and it starts rolling over and breaking the previous consolidation or resistance level, it rolls back down. You want to, get out before you go to a loss. We don't want to give any money back. So you at least can get out with a small profit. If it starts going strongly one way or the other, draw a trend line. If it's going up, draw a trend line under the bottoms and ride that thing until it breaks the trend line. As soon as it stops making money and breaks the trend line, you get out. Same thing on the downside. If it starts going down, 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 and you just draw a little trend line across the tops, and as soon as it breaks the trend line and stops making money, they're out. For my students, I often use the Donald Trump analogy. If it's like an employee, you like it as long as it's making you money, and when it stops making money, you tell that trade you're fired. You get out. That's it. So there we go. So that's the whole thing, Larry. And when we'll follow up, I think their game plan is we're going to follow up tomorrow. See how these things all came out, right?
You got it, my friend. Thanks for calling in, Norm. We really appreciate it.
Everybody have a let me just put up here in case anybody wants to get a hold of me. Here's my contact info there on the next page. And there's my phone number, and here in sunny Florida, 239-594-3939. There's my email, and Winsky at embark with a QMAIL.com. And there's my Skype, norm.winsky. Looking forward to talking to everybody tomorrow, seeing, hopefully, I would recommend the folks try to paper trade these and see if they work or not,
Sounds good to me.
All right. Everybody have a great day.
Thanks a lot, Norm. We'll talk to you later.
You bet. Thanks a lot, Larry. Bye.
Okay. Folks, well, we took a look at the DAX index, and the FTSE is doing pretty much the same thing. They're very, very quiet. I don't know if it's related to the Brexit or whether it's related to what's going to happen in the United States of America tomorrow. So we'll have to wait and see. But we have one market that is really going bonkers, and that's one of the markets that Jason Pfaff talked about last week of seeing 350 in natural gas. And believe it or not, we closed at 330, and we jumped 20 handles on the open this morning and went way above the highs in October. When you usually do that, the best thing to do is to go to a weekly chart. And as you can see here, if you just did the ABCD structure here on the weekly, you could easily get up to that 360 to 370 level that Jason was talking about. This is all related to a couple of things. One, of course, is the weather, and the second thing is there's been a major pipeline explosion for natural gas on the West Coast up in British Columbia, and that'll affect supplies, and here we are, getting ready to start their winter, which is not very good. Now, there's one other chart that we really need to look at today, folks, that keeps it on our radar just about every day, and that is Apple. And if you'll notice here, in Apple, we're trading right now just a tad below 204. That price objective that we're looking at on that ABCD structure comes in at the 1203 and a 1203.10 level. The problem is, folks, is twofold. One is the big gap down after Apple had the earnings. That was on Friday. Now, the second problem is you'll notice that we rallied from the 28th of October into the 2nd of November, coming in right at the 222 level. Folks, that sets up another ABCD level. If we go below that 201 level in Apple, you're going to be looking at Apple somewhere below 196. So this market's in a downtrend. So it's not as easy as it was during July, August, September. I think something happened in October when we had all of these patterns come together. Maybe that was it. I don't know, but at least it's telling us that there's something is rotten in Denmark. But I love Denmark, so it can't be that. What a beautiful country that is, folks. By the way, that is where Walt Disney got his idea for Disneyland. It was Tivoli Gardens, I believe, is what it's called over there. And he was there with his brother back in the early 50s. And he saw that, and he said, we got to do that in the United States. And sure enough, they did. And then he used his old buddy Mickey Mouse to bring the whole thing together. Anyway, as a kid, I should tell you this story. I was 14, and I was 14. Yeah, I was 14, and I hitchhiked with two of my buddies all the way to Anaheim from Terre Haute, Indiana, to go to the opening in Disneyland in July of 1955. I had $50 when I left Terre Haute, and when I returned, I still had $15, and I was gone 5 weeks. We stayed with friends and did a little work along the way, but had a great time, and it was good. As a 15-year-old, though, I was the same, well, not the same size. I was the same height as I am now, but so I wasn't a little 15-year-old kid, and neither were my two buddies, but we had a good time. Anyway, we're going to come right back. We're going to talk about a lot of things, and of course, we got to talk about these currencies because they're ready to rock and roll. So we'll be right back. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted the chart times for Norm's Astro times for today. Remember to use those with caution. Pay particular attention to the bottom of it where it says futures trading can be risky, as if we needed to know that. But anyway, make sure that you do use a stop. And as Norm mentioned, that's usually within using a 1-minute bar. Don't use a 200-day moving average when you're using this, folks. But if it's not working after about 3 minutes, I would assume that that would be counted as a failure. So be really careful. You know, I've been doing the astrology stuff for a very long time, starting really officially back in 1986 when I worked with Dr. Miller. And during that period of time, I've seen some amazing calls, almost to the minute on some of them. And that's why I've always kept an interest in the astrology because, you know, even though I've not found anything close to the Holy Grail, I found certain things that work relatively well, but I have to use them in conjunction with the patterns and the ratios because that's what I use to try to control the risk. So remember, this is you have to take responsibility for this, but you know it does have some application, but it doesn't work all the time. Believe me, I can attest to that, you know, 100%. One other thing that is happening today is the fact that we've got the election coming in tomorrow, and that is going to be really a big deal, as you can imagine. If you remember, back in November 2016, the Dow Jones Industrials was down the limit that day. It was down over 800 points in the Dow Jones. We had a friend here from the neighborhood here in Tucson, and he literally went into his IB account and bought the Dow Jones contract or limit down, and of course it went at the end of the morning when the election was pretty much over. The Dow Jones was up on the day, and he made that fatal mistake. He took his profit. Anyway, that's neither here nor there. I'm not laughing about that, but he was very happy. He bought it back a little higher and still did okay. Now, let's talk about something like this natural gas. This morning when I woke up and I saw my limit minders going off because they were going absolutely crazy to the upside, something big was happening in natural gas on Friday. Let me just show you what we were talking about. Now, Mr. Z was bringing this to our attention in the room, but you notice we had a beautiful sell Gartley up there at that 331 level. perfect ABCD coming in just a tad above the 61% retracement. It then breaks 15 handles and goes down to the 61% retracement. And in just a matter of a few hours, you can see here, this is a 4-hour chart, so that's 8 hours. Look how quickly it jumped, and look how strong it closed. Boy, that if that wasn't a danger signal, we've not seen one. Then of course you saw it gap up, and then it's gone considerably higher. We've got up to 3.57, and of course the ABCD structure on this is at 3.65. But again, we're in a weather market, and we can't we can't take that lightly. So make sure that if you're ready to look for a place to buy this, then that's really what you really need to do. Now the gold market is backed off. We just hit the 382 retracement down here at the 1229 level. The platinum is still acting the strongest. I just wanted to bring this to your attention, and then we'll get to one of the markets that I think is really ripe to have a heck of a rally here that we've been following all night long. And that, first of all, we'll take care of this platinum here. If you notice here on the platinum, this is a 4-hour chart. You can see that we have several ABCD patterns completing up there at the 78% level. And that level comes in at 877. The high last night was around 875. We went a little bit lower than that, but if we get above 882 in the platinum, that could mean that we could be looking at a pretty good move in gold if that happens. So this key level here at 1228 in the gold is in fact very important. That 382 is an ABCD structure also, and it's really not down very much from the high. The high that we made intraday was at 42, it was at 39, and so we came down $11 a barrel, $11 an ounce. So that's normal for the gold. So this is key. So keep an eye on this. This is very, very important. Now, here is one that we focused on in the newsletter that we think is very, very important, and that is this is the crude oil contract, folks. Just take a look at it. Remember, we have the Iranian sanctions that are due right now, and you'll notice that since we made that big butterfly pattern up at the $77 a barrel level, and remember, $77 a barrel, we posted that several times over the past few weeks in the newsletter because it was so important. We had a big 3-drive pattern, and also it was right at the 61% retracement of the high that we made 2 years ago. So that's a very, very important number, 77. And of course now we've dropped all the way down. We hit 62.20, I believe, overnight, and that was really close to the, guess what, the 61% retracement. But this is going to be very, very interesting. If we do go below $61 a barrel due to some type of sanction or whatever might happen, I don't know, then that would tell us that the crude oil is going to go down a great deal. But we're at major support in the crude oil. And if you want confirmation, I know a lot of you get the letter, just take a look here at the weekly, the daily chart here of the heating oil, and you'll notice here that that 78% level that we have marked, that number is 2.1575, and the low last night is 2.5155. So it was spot on. Went 20 cents below the 78% levels. We're now almost $4 a gallon higher. Just are in the pre-market. So this is something that could be very, very important in here. So sort of pay attention to it because we're seeing the same thing in gasoline futures. We're seeing the same thing in heating oil futures. We're seeing the same thing in crude oil futures. And we're doing it at a time when one of the large producers, Iran, is under, economic sanctions. And I'm not sure how to interpret any of that, but that's a fundamental factor. So I'm not going to worry too much about it. So what we're What we're going to do here is we got a break time coming up pretty soon. But when we come back, folks, I want to talk to you a little bit about liquidity in the markets, because I know some of you are new to futures, and I do want to run by, the best things to trade as far as liquidity and which ones are the best as getting more bangs for your buck when you're using margin and stuff like that. These are important things that you really need to know. So we'll cover those when we get back from the break. But I think it's something. And also I wanted to cover fat-fingered heirs. That's what I thought happened last night in the natural gas until Mr. Z let me know what had happened. But it was really an amazing thing. Anyway, we'll cover some of these when we get back from the break. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a minute here and go over the futures markets liquidity. And I think, here we just hit our price objective here in Apple, folks. I hear it going off. We just went below 202, 203. So let me turn this off, otherwise it's going to drive us crazy. And I know us as the word here. Let me just turn this off. Okay, there we go. So we opened right at the wow. We opened right at point D in Apple, folks. That was it. I don't know if whether that's going to be I know that's the big leg down. I don't know if it's going to be the secondary one or not, but keep in mind. All right, let's take a quick look here. What I want to talk to you about is trading liquidity in the futures markets, because it varies a lot. Now, the number one market that everybody seems to watch, which is the E-mini S&P 500, the margin on that, is pretty stiff, because you're looking at something that's trading for roughly 2,700 times 500. You're looking at roughly $125,000 contract, and most of the margin people charge around $6,500 on that. So you're working on a very, very small percentage of the margin, as you can tell. The second best one for liquidity, of course, is the 10-year Treasury note. Now, they move a lot slower than the 30-year Treasury bond. In fact, they move 1/3 lower. It takes 3 contracts of the 10-year Treasury note to equal what you have with the Treasury bond. So remember that as you're watching that, because it's pretty important. But here's the one. And by the way, if you wanted to see these, all you have to do is to get an old issue of Stocks and Commodities magazine. They publish it every month, and it shows the different ones that are important. But the third one, actually the third and fourth ones, I think are very, very important. The third one especially, because that one is the crude oil. And folks, believe me, the crude oil gives you the most bangs for the bucks. I mean, you can day trade this for, I think, $1,500. And remember, you're looking at a contract that's trading for $63,000. So, that's a tremendous leverage. Now, you have to be able to respect leverage, because leverage can turn around and also bite you on the kabuki. So you don't want to run into that. But those are the best ones. And then finally, the fourth one, which is the Russell 2000. That's been it's number 4 on the list, the S&P. The Dow Jones contract is way down the list. It's down around 15 or 20. The NASDAQ is around 10, but believe me, that's not for the faint of heart, because it has tremendous swings, but it also brings in volatility that you might not like. So watch those big 4. Watch the E-mini S&P, watch the crude oil, and watch the Russell 2000. And I think you're going to be you'll be happy just watching those, because they give you a pretty good idea. And the 10-year note or the 30-year bond. The 30-year bond is the one I like, because each tick is worth $31.25 as opposed to the smaller amount with the Treasury note. So those are just a few of the things that we're keeping an eye on this morning. So let's pay attention. Now, the gold has rallied for almost $5 an ounce from our 382 retracement down there at 1228. Should we clear that 1239 level, folks, we're going to be looking at a potential really strong breakout in the gold market, and silver would have to get above $15 an ounce. Whether that's going to happen or not, remains to be seen, but that's what we have to look at. That's very, very important to pay attention to that as we see that. Now, election day tomorrow, it's, what's going to happen election night, folks. It's going to be... But it's going to be so crazy that you don't know what's going to happen, because we have the news media is out there telling us everything that's going on, and we got the fundamentals are pretty great, because we've had a situation where our news in the markets on Friday for economic news was just absolutely spot on. However, the market didn't react to it that well, and that pushed the market a little bit lower. So and today we're just bouncing back from that, but most people are going to sit on their hands until Wednesday, or the overnight traders, of course, will know probably around 8 o'clock, 9 o'clock New York time, and what's really going to happen, if there's going to be any major surprises, or whether we're going to, copacetic. We'll have to do one thing at a time as we look at this. So if you did buy the gold down there at that 1229 level, it's up $5 now, and it's moving pretty strong. Don't let that go to a loss. So make sure you put your stop in, and then you'll have a pretty good indication that you'll have a really good profit in for that day, and you don't have to worry about it too much. The Canadian dollar continues to work for us. We had a little bit of a rally yesterday, and it's backed off about 70 pips from that level. Our original price objective on this is around 29.90. We made the first profit objective at the 30.50 level on Friday, and now we're getting ready to see if we're going to get the second level down. We're going to talk now about the importance of what we're looking at here in this euro, because this is the really key one to look at. I beat the drum on this all the time, but we look here at the long-term weekly chart in the euro. This is so very important, folks. You'll notice over the past 8 weeks, we've come down and we've tested that 113 level one more time. That's the 61% retracement coming off of the April high of 2017. So we're 18 months into that, and now if we break below that, you're looking at an ABCD structure, and we've seen how they've worked with these FANG stocks just since October. All these have gone down to either exceed their profit levels or just barely missed by, very, very small amount. So the ABCD patterns do mean something. And if we get below that 113 level, folks, you're looking at 106 in the euro. And it could be from a whole lot of reasons. It could be something related to something going wrong with Brexit. It could be the Italians are having problems and they want to pull out of the European Union. Anything could happen. And it usually does, as Mark Douglas has said many, many times. So this is why it's so very, very important. And the reason why is because if you look at all the cross-rate currencies, you're going to see the same thing on a shorter-term basis with the U.S. dollar index. You'll notice that this U.S. dollar index is making an ABCD pattern. And you can see the parallel channels that are there. Now, look where we stopped. You see how we stopped really very, very nicely at the same correction that we had during the first couple of days of October. We did that already. Now we're holding our own, and if we get above that 97 level, you're looking at a minimum of 98. And believe me, because of that 382 retracement that we made there on September. When we had the equinox there on the 22nd, I mean, that ABCD structure, that carries you up a long way, folks. You go from 88, up to 98, you're 96, you're looking at 96, 88, you're looking at 105, 103, you're looking at 103 in the U.S. dollar index if that pattern is, and you think that's not going to cause some problems in some people's economies? We'll have to be able to see if that's going to be the case. Oh, I have to cover, when we get back, we're going to talk about fat-fingered heirs. I'll be right back, folks. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Paff's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, now we're going to go to storybook time. Back in 1983, I went back there in January of 1982. I went to the Merck to start to be a floor trader. The S&P started trading on April the 16th of 82. Sometime in mid-1983, Byron and I were setting up in Jack Carl's office, a big hog trader, and Byron says, come on, he says, we got to go down to the floor. He said, I want to show you this. And so we went down to the floor, and there was a lot of Jenny Mays were traded then. And, of course, Jenny Mays were traded at the Merck. The bonds were traded at the Board of Trade. And so I said, what's going on? He said, I want to show you how games are played. And there was a lot of commotion going on. The Jenny May contract had went absolutely crazy. It had moved like 4 handles, and that was like $4,000 across the contracts. What had happened was a broker for Merrill Lynch had sent in an order for selling 200 contracts. And what happened was the young lady on the board hit the wrong zero, and she put the order in for 2,000 contracts. So it was a sell order, but she put it in as a buy order. So not only did she hit the wrong zero, she made a buy-sell mistake. And so it went into the pit. The broker bought and bought and bought, and the market went way up. And then the order came in that it was wrong, and it had to reverse everything. And that was just absolutely unbelievable. Anyway, the amount of money that the floor broker lost, the guy that was filling the paper, was in the neighborhood of around $4 million, as Byron sort of calculated out for me. And I says, what happens? He said, well, he's basically done, but he'll work it off. And I says, what do you mean? He said, you see those 3 guys over there? And he pointed to those 3 guys who I will not mention. He said, those are the money men here at the Merck. He said, anytime a floor broker gets into trouble, they can go over to those folks to get the money that they need, but they have to work off the trades in order to pay the VIG. Anyway, that's exactly what happened. Well, a floor broker at that time, he made $2 a side. Now that, you know, our commissions are nothing. So a deck of the Jenny May size was worth probably $1.5 million a year. So it would take him about 2.5 years to work off the debt, but that's basically, you know, how they did it. Now, that doesn't happen anymore, folks, because we've got electronic trading. The pits don't exist. There's still a few pits exist in Chicago, of course, nothing in New York, but that's literally how things get done. It's the only time I ever saw that, but that's what happened, and that's the way it goes. So we'll have to wait and see. We've had a pretty good jump around today in the markets from being lower to higher. I don't think a whole lot's going to happen until after the election, whatever way it's going to go. Remember, the market is not acting well to good news. We saw that on Friday. We've seen it in all of the FANG stocks over the past 5 or 6 weeks. That's a very negative sign. We've also seen that the advanced decline line is still acting very bad. The new highs to new lows, even on big rallies, 400 and 500 points or 600 points in these markets, is not bringing in a lot of buying. So those are some of the things that we're keeping a close eye on. Remember, my premise on this was a major top was formed in October, late September, early October, with all of the patterns that we had come in, and the rally that we've had just recently since October the 28th, that 5-day rally was nothing more than a 50% retracement in the S&P and the NASDAQ, and the Dow Jones, of course, a little bit less, but that's what we're watching as we look at some of these things here this morning. So just remember, folks, we've got a long way to go to get this thing out of the way. I would not recommend any big net positions into the election unless you really have a strong opinion on something. And, you know, opinions are, you know, like armpits. Everybody has one, and it usually smells. So just be careful and make sure you always protect yourself. Now, we've got a question here about the high-grade bonds. I want to bring these up because I believe here is where the real problem lies on a long-term basis in the economy. You'll be able to see here, yes, we do have a new moon on Wednesday, and we have a new Winsky tomorrow. He'll be on to decide whether these times that he has worked with any degree of accuracy. I wouldn't fade him because he does a pretty good job, as you know. But you know, we'll see. You know, folks, I've had a dream that someday before I go to that big casino in the sky, that CNBC or Bloomberg will have a 5 or 10 minute segment on astrofinance, on these planetary things and the Bradley, whatever it happens to be, you know, some type of a showing you, yes, these things are controlled by cycles, and the cycles are basically nothing more than the planets. And I believe that that'll happen sometime. Whether it'll be in my lifetime or not, I don't know. There's just too much evidence that says there's something there that makes these things see these things are holding up. Yes, the energy is finally bouncing off a little bit. We were down, what, 7 or 8 weeks in a row. That's why that was my feature this week. Looking at that crude oil, heating oil, gasoline, they were all going to that area. Now, that had nothing to do with the natural gas. The natural gas was, you know, quite a bit higher because of the explosion in British Columbia, and then also the fact that we have this El Nino coming in that Jason talked to us about on his show early this morning. He's got a lot of good information coming in, so it's a good way to start the day on, you know, some of the reports and stuff. We'll see what's happening. Okay, let's move on here a little bit, and we'll see some of the other things. We've still got the gold moving. We've been up, but now we're up about $5 off the bottom, looking relatively good. And we'll see if we get some of these others. We got a question coming in. The question: did the Treasury bonds bottom at 137.01? Let's just quickly pull this up here. I'm not sure that it did, Mr. Z, but this market is so bearish. It's just hold on here. Yep, you know, it was right at the 78 cent, right at 78%. I'm doing so many other things tonight in the energy complex. I never really got a chance to look at the bonds. But you'll notice that we did stop at the 78% level, which came in at 137.04. We're now trading at 137.21. So, but that's just to sort of be one of those DCBs. We don't know yet. It's still a bit early. So I frankly think we're going to see volatility just absolutely go nuts here. In November, we had pretty good run of it in October, but I think you're going to see more and more of it in September. In November than we did in October. That's what it looks like, you know, from what I'm watching right now. Someone's asked about the key level in gold. If we get above that 1240 level in gold, folks, I don't know how you can be bearish, because that thing it had such a perfect ABCD pattern at that 1246 and change, and if we get above that 78% level, that would give you the first indication that something is not quite right, and you could be looking at something, you know, a little more sinister
well, not sinister, because bigger rally to the upside. I believe that it all hangs on the back of platinum. I never don't trade platinum, but platinum's been the leader of the pack. So, watch platinum. If you get platinum above 880 an ounce, that's going to be a pretty big thing to look at. Let's take a quick see here where platinum is this morning, because it was up most of the day. Then when gold started to sell off, it came back, and if it's correct, it'll be the one that will be, bouncing back the fastest. And yep, sure enough, it's already jumped $7 off the bottom. We're trading at 873. Anything above 880 in platinum, be careful. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign
Tom
up today.
O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have just a couple minutes to go here. Regarding those times that Norm posted, the main ones being that 1140, 1144 area, they posted them so you'll be able to see the exact times. Those are times where these aspects come into play. Sometimes they work, sometimes they don't, and he'll be talking about those tomorrow when he comes back on. But what you'd like to see is you'd like to be seeing the market making either, that you're following, making either high or low at that time. So you're going to be within a minute or two of that occurring. And if you're watching a ratio or a price pattern, that is some way to add to your way of protecting yourself, because you got to find a spot where maybe it works, maybe it doesn't, but you've got to be able to protect yourself, and that's what the patterns and ratios try to do. They give you a little bit of an edge. Whether the astrology works or not is helpful. Sometimes it does, sometimes it doesn't. Remember, if you did the trade and it's a couple of minutes past the time and it's not moving in the direction that you like, and then figure that it's just a failure, stand aside, it's break even, no harm done. So pay close attention to it. Regarding the euro, folks, we this morning's early morning low at the euro at 113.65 was 3 pips away from the 61% retracement, so we need to keep an eye on that. The dollar index still looks very, very bullish. The euro still looks very, very weak. All this could change following the election tomorrow night, but be sure you do one thing: make sure you get out and vote, because if your vote doesn't count, that's it. Being from southern Indiana, the old adage was vote early and vote often. That was the way it was supposed to be back in the old days of Terre Haute, Indiana. I'm sure some of that is past tense, but we'll have to let history decide that. But the election will have some ramifications, as it always does in different parts of the world or whatever. And then we've got Brexit to worry about, or can be concerned about. And then we also have the thing that's going on in Italy. The Italians are having trouble. 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em!